In exactly 45 minutes, a single software bug will vaporize $460 million. That is $10 million destroyed every 60 seconds. No hackers, no market crash, just 8 servers, 1 missing update, and a rogue algorithm that refused to die.
Welcome to the glitch. What happens when the system fails?
To understand how a machine goes rogue, we have to look inside the architecture. In 2003, Knight Capital buried a piece of test code inside their system called PowerPeg. Its only job was to buy high and sell low to test other programs. It was a financial suicide bomb, but engineers turned it off and left it dormant in the codebase for 9 years. At the heart of Knight's empire was a massive automated order routing system called SMARS. SMARS was designed to take massive incoming orders and slice them up into thousands of tiny child orders, executing them across different exchanges in milliseconds to get the best possible price without spooking the market. It processed over $20 billion in trades every single day. Until one morning, it turned into a financial weapon. Our story actually begins 23 years earlier, in 2003. When engineers build complex trading algorithms, they need a way to test how those programs react to extreme market conditions. So Knight's developers wrote a specialized testing script called PowerPeg. PowerPeg had one very specific, very dangerous job: to intentionally push stock prices higher or lower in a test environment. Normally, the first rule of trading is to buy low and sell high. But to create artificial market pressure for testing, PowerPeg was programmed to do the exact opposite: buy high and sell low. It was designed to aggressively eat through available share volume, purposely losing money to see if Knight's other algorithms could handle the turbulence. It was literally programmed to burn cash. By 2003, Knight stopped using PowerPeg. They told their systems to stop routing orders to it. But here is the first fatal mistake: they never actually deleted the code. Instead of removing the PowerPeg software from their servers, engineers simply left it sitting there, dormant, inside the live SMARS codebase. In software engineering, this is called dead code, abandoned logic left rotting in a production environment. And for 9 years, it sat in the dark, waiting. Even back in 2003, engineers knew PowerPeg was dangerous, so they built a safety break into it, a feature called a cumulative counter. Every time PowerPeg bought or sold shares, the counter tracked the total volume. The moment the algorithm hit its target share quantity, the counter triggered a kill switch, stopping the program from sending out any more child orders. It was a failsafe against infinite loops. But in 2005, Knight restructured the SMARS codebase. During this cleanup, engineers moved the cumulative counter to a different part of the system. In doing so, they accidentally disconnected the safety brakes from PowerPeg. Because PowerPeg was dormant, nobody noticed. When automated unit tests began failing because the throttle was gone, developers didn't fix the code. They just deleted the failing tests. The bomb was now completely unpinned. All it needed was a trigger. That trigger arrived in July 2012. The New York Stock Exchange was launching a new initiative called the Retail Liquidity Program. Knight needed to update SMARS to participate. But to route orders to this new program, the software needed a signal, what engineers call a bit flag. Think of a bit flag like a light switch on a data packet. Instead of creating a brand new switch, an engineer decided to cut corners. They recycled an old, unused switch. Which one? The exact bit flag that used to activate PowerPeg. Because PowerPeg was dormant, nobody noticed. When automated unit tests began failing because the throttle was gone, developers didn't fix the code. They just deleted the failing tests. The bomb was now completely unpinned. All it needed was a trigger. In 2012, Knight didn't use modern, automated deployment pipelines. When software needed an update, a technician manually logged into each live server, copied the new files over, and restarted the machines. In the final days of July, A technician rolled out the new software across Knight's 8 production SMAR servers. Servers 1 through 7 received the update correctly, but due to plain human error, the technician missed server number 8. Server 8 was left running the old code, meaning the dormant power peg algorithm was still alive inside it, connected to that recycled bit flag. August 1st, 2012, 9:30 a.m. The opening bell rings. Brokerages send 212 small retail orders to Knight, with the recycled bit flag flipped to yes. When servers 1 through 7 see the flag, they execute the new retail liquidity code. But when those same orders hit server 8, it reads the flag under its old definition, activate power peg. Instantly, the zombie wakes up. It begins buying high and selling low at lightning speed. And because its safety brakes were severed in 2005, it never receives confirmation to stop. It enters an infinite loop, firing thousands of orders per second. On the trading floor, screens flash blood red. Millions of dollars are vanishing every minute, but Knight's operations team has no central kill switch. Blinded by panic, they make a fatal guess. They assume the new software is broken. So at 9:35 a.m., they roll back the code on servers 1 through 7. In an instant, they replace the healthy code with the old binary. Now all 8 servers are running PowerPeg. The trading volume multiplies 8-fold. It takes 45 agonizing minutes before someone finally pulls the physical cords on the routing engine. The damage was absolute. In 45 minutes, PowerPeg executed 4 million trades across 154 stocks, trading nearly 400 million shares. Knight Capital lost $460 million, more than the entire value of the company. Days later, facing bankruptcy, they were forced into a fire sale acquisition by a rival firm. A Wall Street giant, erased in less than an hour. Today, the Knight Capital disaster is taught as the ultimate masterclass in software engineering risk. It forced the financial world to adopt 3 unbreakable rules of modern DevOps. First, aggressive code hygiene. Never leave dead code in production. If it isn't running, delete it. Second, automated deployment. Never let humans manually copy binaries to servers. Use automated CI/CD pipelines with strict checksum verification. And third, automated circuit breakers. Every high-frequency system today must have a hard-coded, independent kill switch that physically severs exchange access the second loss or volume thresholds are breached. Because in a world driven by algorithms, a single unmonitored line of code can cost $10 million a minute.